and welcome to the Ultimate Bull Run, where we bring 100 bulls, 100 stories in this one legendary run. Our mission is to celebrate the journey and the process of trading and investing rather than just focusing on the numbers, because we believe wins and losses are just the tip of the iceberg. And today, we have a very special guest with us, who is a leading voice in the world of crypto and investment strategies. Joining us is Joe Burnett, a key figure at the III Capital Management. Joe brings a wealth of experience from top-tier organizations like Blockware Solutions and Mimesis Capital. He has also served as an advisor for Bitcoin Magazine, and he's currently growing Unchained, which is a leader in the Bitcoin financial services. He's widely recognized with his profound insight into the Bitcoin market and the crypto market trends. Please join me in welcoming the Ultimate Bull, Joe Burnett. Welcome to the show. Welcome to the Ultimate Bull Run.
Awesome. Yeah, thanks for having me. Glad to be here.
It is an honor to have you in our show. Yeah. So Joe, we usually take it way back in your time, right? When you first started. What initially sparked your interest in investing, and how did your journey lead into the world of cryptocurrency in general?
Yeah, I always love to hear people's Bitcoin origin stories of how they first heard about Bitcoin and what they initially thought of it. I grew up interested in investing, interested in value investing, I guess, in particular. It's very interesting to me that you would, I would go on there, go on E-Trade or Fidelity or whatnot. I would buy shares of Coca-Cola as a young kid, buy shares of IBM, blue chip public equities that everyone has heard of. And, for decades has kind of been how normal people save for the future by taking a little bit of extra risk, because most people intuitively know that they can't just save dollars in their checking and savings account for decades. That's a losing bet because of inflation, which is just a natural process with the US dollar. And so they know they need to invest that money and make that money work. And so, public stocks was a way that I kind of originally got interested in investing. And then I remember when I was in college in 2017, that was during a Bitcoin bull run where Bitcoin went from, $1,000 maybe at the start of 2017 up to nearly $20,000 near the end of 2017. And I remember at the time, seeing the price of Bitcoin just go from 1,000 to 3,000 to 6,000. And then at the very end of the year, went to 18, 20,000. And I remember being very interested in what it was, because I couldn't quite understand what it was and why it was going up so much. I knew if you looked at something like Coca-Cola or IBM, that is a real company. They produce real products and services. They generate real cash flows. They generate real profits for their shareholders. There's obviously real value with those public companies. And then there's this Bitcoin thing, which is a digital rock that's for some reason going parabolic in its price. And from my perspective at the time, had no idea why. And it interested me, because I was like, okay, this is new technology. I don't really know what it is. I don't know why it's going up a lot, but there might be something here, whether it's Bitcoin, crypto, or whatnot at the time. So at the time, I bought a little bit of Bitcoin, rode it up to 20K top. And then all throughout 2018, that bear market in 2019, when Bitcoin went from $20,000 back down to $3,000, I dove into researching about Bitcoin, trying to understand what it is and why people are holding it. And I eventually just came to the conclusion that Bitcoin is simply money. So it doesn't need any sort of cash flow, doesn't need any sort of dividend. It's simply a superior form of money because it has unique monetary properties. It's scarce, portable, durable, divisible, and fungible. And because it has those unique properties, and if you evaluate Bitcoin compared to gold, silver, dollars, ray stones, seashells, salt, glass beads, all historical forms of money, you then recognize that objectively Bitcoin's monetary properties are superior compared to all of these other monies that have existed throughout history. And so that's why, in my mind, Bitcoin continues to go through these massive adoption phases and then also massive bear markets. It's because the world is in the process of monetizing Bitcoin as money. And obviously, not everyone has figured that out yet. But I think over time, more and more people are figuring it out. And that's kind of how I originally got interested in Bitcoin.
That is really interesting. I remember back in 2017 as well. I was in a class. I think it was computer science class, right? And it was 15-minute class. I was just looking at my phone, checking the price of the Bitcoin, climbing from 2,500 or $3,000 to like $5,000 within like a 15 minutes time frame. I'm like, it was much more interesting than the class itself. And yes, that is true. Like a lot of people got in because they saw like the parabolic movement of it, and once those who stayed, they knew later, later in their journey, they knew what it is all about, what is the revolution is all about, and it's really inspiring. Yeah. Talking about, most people, I would say, we are wired to see and focus on the result, but we believe challenges make us who we are, right? What are some of the challenges that you have faced over your journey, and how did you actually overcome it?
Yeah, it's a good question. Kind of like I mentioned, my biggest challenge with Bitcoin was recognizing it's not just a bubble, or it's not just a bubble or a pet rock because it has no cash flow and it has no business. It has no CEO. It literally is kind of this like digital pet rock. But that I overcame that because I recognized, I took a step back and I said, wait, what actually is money? And then once you figure out like, okay, money is just a tool or or a good, and society is converging on one money, because the whole point of money is to find one tool that we use for savings and trade. And so we're not bartering stuff. So like if I make apples and you make bananas, we have this problem called the double coincidence of wants, where if I want bananas, you also have to want apples at the exact same time. So we both have to have the same wants at the exact same time. So instead, what happens under a free market is we decide that each individual person ends up converging towards one common tool that we use as money, and that's durable, divisible, portable, and scarce, so that when I want to buy bananas from you, you don't also have to want apples from me at the exact same time. We can exchange this one tool known as money, and by the nature of what money is, we converge on the one best tool. And then when you look back at the properties of money, you figure out that Bitcoin is the best money. So yeah, the biggest hurdle and challenge, I guess, for me was just recognizing that you don't need cash flow or you don't need profits to have Bitcoin, be valuable. Like Bitcoin is valuable in of itself because it's just the best monetary tool that humans have ever discovered. Another challenge is the volatility of Bitcoin, right? I think that frightens a lot of people because no one really like truly understands Bitcoin, especially if you don't hold much Bitcoin. You see these massive bull markets, and then you see these massive bear markets. Like you said, in 2017 went up to $20,000, and then 2018 crashed back down all the way to $3,000. Like that's a very extreme drawdown compared to S&P 500 or any sort of like traditional asset that most people are saving. But I think what I learned to overcome that challenge, or to kind of overcome that bias of being scared of volatility, is I learned that volatility is kind of what drives returns, right? Like if something has zero volatility, then that just means it's not going anywhere. It's a perfectly straight line. Bitcoin is highly volatile, but over the long run, this volatility is clearly just to the upside. And so the downside volatility doesn't really exist because Bitcoin became worse than it was a year ago. Bitcoin is actually the exact same thing it was the year before that. The supply schedule hasn't changed. It's still censorship resistant. It's still portable. It's still durable. It has all of these same monetary properties. The only reason it had the bear market is because before it went up like 1,000% in 1 year. And so it's like, yeah, if you go up, 1,000% in 1 year, it might fall 80% the next year, but still you're up massively if you just are willing to zoom out on a long time horizon. And so, yeah, I think the volatility plays a pretty big role in challenges that I've faced and then other people face. But again, you just have to recognize that despite short-term price changes, Bitcoin is still the same. The supply schedule is still the same. The monetary properties are still the same. And it's most likely, if that's the case and your thesis is because of those things, then Bitcoin is the world's best money, then it's likely a buying opportunity that Bitcoin happened to be down, X% over a relatively short time period, because in the long run, most of the volatility is to the upside.
That is really true. Talking about, I mean, to extend on what you said, the monetary terms, and a lot of people are wired to just be on the safe route, which is whatever we have right now. But every year there's inflation, and your value for the money is decreasing. As I think as soon as people really understand the true meaning of money, probably they will have a better understanding of Bitcoin. To extend on this topic again, do you see Bitcoin as an asset class, or do you see Bitcoin as a monetary terms where you can exchange things, from just like money? How do you treat them?
Yeah, it's a really good question. And I think this is part of the reason why so many people struggle with Bitcoin is because it doesn't intuitively go into any of their like categories that they have in mind when it comes to investment classes or asset classes, right? Like it's clearly not a company. It's clearly not real estate that people own. It's clearly not a bond. It has no future cash flows. It's kind of like a commodity, but it's also not much like a commodity because what do you use Bitcoin for? Like nothing. Like you can't eat Bitcoin. You can't put Bitcoin in a computer. Like it's a digital thing that exists out there. And so a lot of people have a very difficult time, categorizing what Bitcoin is. In a way, you could say like Bitcoin is its own asset class. It's like, digital money. But I think maybe like the better way to think about it is just money itself is kind of its own asset class. And Bitcoin just happens to be the best money. And because Bitcoin is the best money, because it has the superior monetary properties, and because money trends to one common tool, then Bitcoin kind of should become or is becoming the only asset within the monetary asset class. And so that's kind of how I think about Bitcoin is it's not a company, it's not a commodity, it's not necessarily real estate, it's not a bond. It's just money, and money itself could be in a way its own asset class. There can be competing monies, right? Like you can have the dollar, you can have gold, you can have silver, and maybe everyone is holding those assets as like money or long-term savings or however you want to think about it, or a medium for exchange is another way to put it. And maybe it's the case, but I think in the long run, economic systems tend to trend toward one best money, and I think that best money is Bitcoin.
That is a good answer right there. Thank you. Moving on to, I mean, I wanted to talk more about the volatility because it scares a lot of people out. Like you said, yes, in a year it goes from $3,000 to 20,000, and from 20,000 to 12,000 to 65,000, 70,000. The upside potential is there, right? And the same with the downside potential. How do you tell someone who does not have a lot of knowledge and kind of gut to stay through this kind of market? What do you tell them? Should they look for the long term? And then, I mean, yes, in the long term, if we look just 5 or 7 years ago, the value has increased significantly, right? There is no comparison to any other asset compared to Bitcoin. So what do you tell anyone who is new who want to invest in the crypto market?
Yeah, it's a great question. I'm one of the Bitcoiners, I guess, that would say that there's still, at least as of today, there's still room for holding some portion of your wealth in US dollars. So I view Bitcoin as the best form of long-term savings technology. meaning if you have wealth that you do not plan to use for the next 4 years and you want to hold it for 4+ years into the future on the best risk adjusted basis, then I think that wealth belongs in Bitcoin. I think if you need short-term wealth because maybe you don't have much savings and you might lose your job and you need to make sure you pay your mortgage, or you have children that you have to take care of, that money should be allocated to potentially dollar savings in a savings account. So that's kind of how I think of Bitcoin. Is it's not necessarily today because it's so volatile. It's not short-term money. It's better long-term money. And then the dollar is obviously not good short-term money. It's better, or yeah, it's the dollar is not good long-term money. It's better short-term money. And we all know the reason like the dollar is not good long-term money is because in the long run, it's designed to debase against basic consumer goods, right? Like basic consumer goods are things that are so easily made. Like as technology gets better and better, we are able to create more and more water bottles, or more and more basic food, or more lumber or oil or whatever it is. Like new technology enables us to produce more and more of these consumer goods per unit of energy or time or whatnot. And just in despite us being able to produce these more and more and at a faster and faster rate, like the dollar still gets debased against those. Like it's even worse than, so it's kind of like a double loss scenario where these things are getting easier and easier to produce, and your money, your dollar, is getting devalued against those. On the flip side, though, like we live in a debt-based monetary system where we see these massive bull runs in tech stocks and the S&P 500 and real estate, and then we also occasionally see massive bear markets in tech stocks, real estate, Bitcoin, you name it. And when that happens, a lot of this credit expansion that happened during the bull run starts contracting, and then the only safe asset are like dollar denominated assets that were issued by someone that had someone that has very low counterparty risk, like the US government, or a very secure bank or a very big bank. And so there are scenarios where kind of everything crashes in dollar terms, and like the actual dollar is the only thing that's actually performing well. Like today is a good example. The day we happen to be recording, things are falling, and the dollar is one of the only asset classes that's doing very well. And you need to hold good dollars, whether that's dollars in JP Morgan checking account or savings account, or T-bills, which are like effectively dollars that were issued by the US Treasury. And so I think dollars are good short-term money, and then Bitcoin is good long-term money. And if as long as you have a long time horizon, a large portion of your wealth should probably go to Bitcoin. But I still think there's also room for people to hold some dollars in their portfolio.
That is a wise answer. A lot of people do just say, you just go all in with Bitcoin, or, just ditch the dollar. But that is not practical. Yes, there is the world where both can exist, and they both can, balance each other out. Like you said, one can kind of offset the other in terms of short term and long term. That is really true. Looking back at your early days, what are some of the most valuable lessons you have learned from investing, and how those lessons have influenced your current investment strategies?
Yeah, it's a great question. One thing that I think I've learned over the years is that like the market, like the free market, is a very like intelligent system. I think a lot of people that don't have much experience investing think that they can go out into the market and outperform the market, basically. Like they think that they're smarter, more intelligent enough to generate real alpha or real returns that someone else that has like a Harvard PhD is for some reason not able to generate, right? Like you've seen the stat that a large majority of hedge funds, maybe like 98% of hedge funds, historically have not outperformed the S&P 500. And the S&P 500 is something that normal people can get access to very cheaply, and they can hold it for decades, and they'll do pretty well in dollar terms, of course, just holding the S&P 500. And so I think like one lesson that I took away with that is that even the smartest people in the world have a very difficult time outperforming the S&P 500, which is kind of like a benchmark for can you generate more returns than the market itself. And so I think Bitcoin is very related to that, because I think Bitcoin is the best money. And a lot of people might think, oh, like I can try to time the Bitcoin market. Like obviously it goes through bull markets and then it goes through bear markets. I'm going to buy the bottom of the bear market, sell the top of the bull market, and then buy back lower in the bear market. And, obviously that'd be great if you could do that. And you can do that, paying your taxes and still outperforming it, because obviously if you sell at the top, you're going to have a massive capital gain to sell or to pay to the IRS. So that means Bitcoin needs to go down at least that much so you can get a better entry point, and then it needs to go down further for it to make it worth all of that hassle. And then again, it's like, how do you actually time the top of the bull market, and how do you actually time the top of the bear market? I mean, as someone, I'm sure you have this too, like living through these Bitcoin cycles, it's almost impossible to do that. Like the reason the top of a Bitcoin bull market exists is because everyone in the market thinks Bitcoin at that moment is going to keep going up like forever. Like we're all like, and that's why it got so high, because none of us wanted to sell. We were all buying as much as possible. And of course, at that moment, it's likely going to be the top when everyone thinks it can't go any higher, because at that point, it's like everyone's bought as much as they could. No one's selling, any of their Bitcoin. And so there's just a ton of demand, very little supply. And of course, on the chart, that just happens to mark the top. And then at the bottom of the bear market, it's like all of us are a little concerned. Like we're like, oh my gosh, like, even if you're confident in Bitcoin, which I think you should be, as long as the fundamentals of Bitcoin haven't changed, many people out there that are just kind of bystanders or somewhat interested in Bitcoin, they see Bitcoin falls 80% and they're like, oh my gosh, like the world is ending. Like this was obviously a Ponzi or a bubble. Like this is completely worthless. And so at the bottom of the bear market, it's extremely hard or mentally exhausting to buy Bitcoin in size right at that moment, because at that moment, everyone's selling, few people are actually buying, and everyone thinks the world's going to end. And that's what actually marked the bottom. So my kind of somewhat long answer there is, people think that they can time markets, and people think that they can outperform the free market and just like benchmarks like the S&P 500 or like cold storage Bitcoin. And my opinion is, you can get lucky and outperform the S&P 500. You can get lucky and outperform Bitcoin, just like if you walked into a casino and did blackjack or whatever one time, bet $100, like maybe you have a 45% chance of turning that $100 into $200, but also maybe you have a 55% chance that you turn that $100 into $0. And so just because you happen to turn the $100 into $200 one time and you got that 45% chance, that doesn't mean that you were smart for that or that you were right. Like that just means you probably just got lucky there. And so I think that's the same case with most likely outperforming the market itself. Most people should just sit on their hands, not try to outperform the market, buy cold storage Bitcoin, and then focus on their job, their family, or whatever else they're doing in their life. Because speculating and trying to trade different assets and trying to outperform the S&P 500 or outperform spot Bitcoin is, in my opinion, a very, very, very difficult game to play. And it's just mostly not worth the hassle. And most likely, I think most people will just, if they do that, they'll end up with less Bitcoin than they had. So I think the best thing to do is just buy Bitcoin, hold in cold storage, and then move on.
That is true. Well, before we move on to the risk management side of it, I wanted to get your opinion, because a lot of people try to predict the price of the Bitcoin in each cycle, right? And currently, there's been a huge support and test the model which is called the power law, who was created, Giovanni Santostasi. We had him in our podcast, and the chart he shows is really fascinating. He takes the log of the price and the time, and it smooths out the crazy movement that we see in the Bitcoin price. How much do you believe in the chart or the model predicting the Bitcoin? And if you believe in it, do you think people can use that to kind of not exactly predict where the market is going, but use that as a gauge to get in and get out?
Yeah, it's a great question. The model talk is so interesting to hear different people's perspectives on. Um, Very high level, I tend to take Saylor's viewpoint where he says all of your models are broken. I think that's true. Like no model is going to perfectly describe reality of like what's going to happen to Bitcoin price. They're all just kind of simplistic representations of the world that we live in, and the world that we live in has basically an infinite number of variables. And so with an infinite number of variables, you're not going to be able to perfectly predict anything about the future. But with that said, they can still be useful. I think it both the power law and the stock to flow model, which I like. I like both of them. Like they're not, neither of them are perfect, but I like the idea and the concept, and I think it helps people recognize or gives people a picture of what the future Bitcoin might look like, because it kind of has done so in the past. They're not perfect again, and they will never be, but I think they're interesting to think about like that. Would I use them to like time the market? Again, probably not. Just because I think like I wouldn't. Maybe you can to some extent. Like if Bitcoin is extremely low and you happen to have a good cash position at a certain time, and you happen to spot a good dip, or like your bonus hits at work and you have a large amount of cash, and you're like, should I hold on to the cash or should I, maybe deploy into Bitcoin? If Bitcoin is low relative to some of those model prices, or it's just low relative to like a moving average of Bitcoin, like if Bitcoin is historically, down 50% from its all-time high or more, then maybe, yeah, that's probably a decent time to buy some Bitcoin. Doesn't mean that like you should be trying to do that on purpose, but it just means that like, maybe now is a decent time if it's down a lot. And then if Bitcoin's up a lot, maybe now is a decent time to kind of pause and take a step back and see if, if it's going to keep going up, the 1,000% it just did maybe over the last 12 months. So yeah, I mean, the models are interesting. I think it helps people show like what Bitcoin's true potential is, because I would definitely argue that, Bitcoin currently is a $1 trillion asset class. And that's like 0.1% of the entire global wealth. So one thousandth of the entire global wealth, which is basically nothing. So I think it's helpful because it shows people the potential of Bitcoin, where you're like, hey, Bitcoin can be $1 million per coin. It can be $10 million per coin. Like Saylor talked about, it can be 14 or like $49 million per coin. Like those numbers sound crazy, but I think those are also very possible. And so, yeah, that's kind of my idea. Like they're good to show people that Bitcoin has been growing rapidly over the last 15 years. It's probably going to keep growing rapidly over the next 15 years. As far as like what happens over the next like 2 or 12 months, 24 months, very difficult to say. Obviously now kind of looking back, like we're like currently Bitcoin is below its all-time high back in 2021. So if I had to lean one way or another, I would say that like we are on the cusp of another large bull market, but it's hard to really know for sure. So yeah, I like the models. They're not perfect. I wouldn't use them to like trade Bitcoin, but you can use them to maybe see if Bitcoin is kind of like temporarily overheated or temporarily undervalued.
That is true. It will give you a gauge of when the market might be heading toward. That is true. Um, do you think there is this, or there will be a time where we'll stop talking about the price of one Bitcoin and start thinking and talking about satoshis? Because I mean, I try to onboard a lot of people in this crypto, right? And I've been doing this since 2017 when the price was 3,000. They said it was expensive back then. When it was 10,000, they said it was expensive back then. Right now it's 65, and they think, oh, it's too much. I cannot even own one Bitcoin. And that is their way of thinking. Is like, if I cannot own one unit of it, why would I even invest in it? That is up my limit, right? So should we break that? I mean, we already have a concept of satoshis, right? Should we start kind of, as a community, as the, the leaders of the Bitcoin and the crypto space, do you think it is a time for everyone to start talking about satoshis, the value of Bitcoin per satoshis? Because I think that is really, really important for retailers who want to kind of own, and get into it.
Yeah, it's definitely very unfortunate that people kind of fall subject to that unit bias where they're like, oh wow, Bitcoin is, 60, I don't know what it is right now, $65,000 per coin. That's a or $60,000 per coin. Like that's a lot of money. Like to Americans, like that's a lot of money. To like all over the world, that's like, generational wealth. It's for sure a lot of money. So yeah, it's a great question, and it's unfortunate that some people will be like, oh well, it's too late. I can't afford one Bitcoin. Why would I even spend my time thinking about this? I definitely think that's not a good way to look at it, right? Because Bitcoin, like the concept, is just like this perfectly scarce pie, and the pie is divided into currently like 21 million units. But you can always cut smaller slices of the pie. What's important is you have some of the pie. You have that small fraction of the pie that is not going to grow or expand or get diluted. Like your share of the pie is your share of the pie, whether you own one sat, which is one millionth of a Bitcoin, or you own 1,000 Bitcoin, which obviously very few people actually do own 1,000 Bitcoin. And so, yeah, I think eventually, yes, people will definitely start thinking in terms of Satoshis. I don't know if people will call them Satoshis at that point, right? Like you think about like MicroStrategy stock is a good example. I think on like August 8th or so, the MicroStrategy stock price per share is going to like get cut in half by a 10 because there's a 10 for 1 or 1 for 10 stock split where if you had one share of MicroStrategy, now that one share it equals 10 shares and the stock price adjusts accordingly because of that. I think it's very possible that eventually that'll happen for Bitcoin where people just start saying, wait, it doesn't make sense. Like if we're using Bitcoin as a medium of exchange or medium for exchange, it's not going to be easy going into the store and seeing the price of bread being 0.000 Bitcoin. Like that's kind of hard to read and difficult to understand. But if you walk into the store and you see the price of bread is 100 sats, that's or 10 sats, that's a much easier number to like wrap your brain around and see. And it's also easier for, retail participants to go out there and be like, oh, I know I can buy 10,000 sats. I can buy a million sats. A million sats currently may be, I guess $600 right now, close to that. Like maybe I can actually afford a million sats. So yeah, I think people will actually start thinking in terms of Satoshis. I think it's still like very early for that to happen, but I do think it will be like a gradual thing that just becomes natural mainly because the price of Bitcoin just goes absolutely berserk. And people are like, why are we even thinking in terms of Bitcoin anymore if almost all of us are sending fractions of this Bitcoin, to each other? And I think even within like the Bitcoin core itself, which is like the source code of Bitcoin, when you want to run your own full node, there actually aren't any decimal places like within the units of Bitcoin. Like they're actually all just Satoshis anyways. It's just within the UI of the platform that happens to add a decimal there because when Bitcoin first started out, like 50 Bitcoin was still worth nothing. Like that's just how it worked. And so instead of, when the program started saying that you just received 5 billion Bitcoin, he simplified it and said you received 50 Bitcoin for this first block that you mined. And that made it easier at the time for people to like wrap their heads around it and kind of also wrap their heads around the scarcity of it too. Because back then that was worth $0, literally. But now it's like 50 Satoshis is worth more than 50 Bitcoin was back in 2009 when Bitcoin was worth $0. So at a certain point, yes, I think we'll just start thinking in terms of Satoshis, and maybe it'll be called Bitcoin at the time because
Yeah,
that's
yeah.
just
I'm
how it
looking
is.
forward. I'm looking forward to it. Today is what, August 1st in 2024, and I believe by the time we kind of start thinking this way in terms of satoshis or in terms of the decimal, the smallest unit possible for the Bitcoin, I think people will have a narrative of, you used to call Bitcoin had like a 21 million supply. Now you see there's like they kind of divided all these things, and there will be a lot of kind of FUD, whatever we call it, around this narrative. And I hope people can distinguish what it is compared to what it is currently right now. That is really true. I'm looking forward to it. Um, Talking about the risk management side of it, we have talked about the volatility involved in it. We have talked about how the price moves. What do you, from your experience, right? How do you kind of balance the risk and reward factor in terms of crypto, in terms of investing, and while you are aiming for the high returns?
Yeah, it's a great question. So first, like when I think about risk when it comes to investing and when it comes to Bitcoin and when it comes to crypto, is the whole purpose of money is for society to converge on one best money, right? Like I said that. And so when it comes to other cryptos, whether that's like Dogecoin, Ethereum, meme coins, or whatever you want to talk about, um, I I think if it's not the best money, then its long term value is going to trend towards zero, specifically zero Bitcoin, because I think Bitcoin is the best money. Um, and so if you're going to argue this other crypto is not money, it's some sort of like decentralized computer or whatever meme phrase, buzzword that people want to like refer to this other crypto to, they need to ask themselves like, what makes it valuable? Because if it's not money, then what's going to make it actually valuable? My answer to that would be, well, it would need to provide some sort of cash flow, whether and particularly it should be cash flow and eventually in Bitcoin, like, or you should be able to cash out that cash flow to Bitcoin. And most of these like altcoins, they do like try to burn a percentage of their coins. They try to offer yield via staking, which kind of just turns into like this like reflexive Ponzi thing where like, yeah, you can offer yield, but like you're just debasing the money anyway. So like you can create 7% new supply and earn 7% yield, but like that's not really getting you yield for anything. Like you're just getting the same thing back. And it's probably worse than that. It's probably like they're debasing the money by like 10% and then you get 7% back. So you're actually losing wealth despite earning that yield or that cash flow. So when it comes to risk, I think almost all crypto outside of Bitcoin is most likely going to trend towards zero in the long run, meaning on a long time horizon, these things are incredibly risky and probably worthless. When it comes to the S&P 500, I think that in Bitcoin terms, that's fairly risky, like it has been over the last 15 years. Like the S&P 500 has been crashing for 15 years straight in Bitcoin terms. With that said, like I don't think the S&P 500 is going to go to zero. Like it should keep going up, especially in dollar terms over the long run, because they are. When you buy the S&P 500, you do hold a basket of large public companies in the United States that produce real cash flow. So there's risk with the S&P 500 in Bitcoin terms, but long term, like it's gonna do fairly well. Not in Bitcoin terms, maybe, but at least over the next 5 years. But in dollar terms, of course, that's going to probably keep going up. And yeah, so that's kind of how I think of risk. Like, and again, with Bitcoin, I never suggest people have 100% of their net worth in Bitcoin. I strongly suggest that people, if you do use leverage, like use leverage in an intelligent way. And personally, like I try to stay as far away from leverage as possible because it can wipe you out, because Bitcoin is hyper volatile. If you borrow against your Bitcoin, you might get wiped out. If you're going to do that, you need to do it in a very, very, very conservative manner. And so yeah, I think there's place for a large portion of your portfolio to be Bitcoin. There's place for even holding dollars for your short-term liabilities, like your rent, your mortgage, your kids, or whatever you need to pay for the next 12 months. But long-term savings, Bitcoin is an excellent place for that category of your portfolio.
That is nice. It is good to hear about the other side of the crypto world, except for the Bitcoin. Um, I did have a podcast yesterday with the Henrik. He is a prominent figure in the meme coin industry, and I liked one narrative that he was talking about, especially targeting the Generation X and the new generation of people. Right, they are more inclined, and they talk in terms of meme, right? And that is where the meme coin started popping up, and they are doing far well than the other the altcoin with the good use cases. I mean the use cases in terms of the decentralization. For example, the Ripple has one of the best use cases, except for the Bitcoin, right? And there are some other crypto who are trying to solve the decentralized problem. And kind of, the BlackRock is interested in the RWA, real world, tokenization of the real world assets. Do you think in a long run, again, these kind of platform or this kind of innovations or the projects can actually, instead of creating a cash flow, they can provide or be a platform where some more things can be built on top of?
Yeah,
And what are your view on the meme coin narrative?
it's a great question. I'll take the meme coin stuff first. I view meme coins as effectively a casino, right? Like you're very welcome to walk into a casino, hit the slot machine, pull the lever down, put in your $100, and maybe you can walk out with $100,000. Maybe. But if you do that enough times, statistically, you are going to lose all of your money. So that's how I view meme coins. It's a negative sum game where if you're winning, someone else is losing. They're not good money because Bitcoin is a better form of money. And so it's just like if you bought a bunch of Dogecoin or whatever dog with hat coin, whatever the current meme coin thing is, if you bought it at 1 cent and it went up to $1,000 and you turned $100,000 into $100 million, what you effectively did was you bought that stuff for relatively cheap, and then you dumped it on someone else, and someone else is probably going to get absolutely destroyed because you never did anything for society. You just bought this meme coin for a very cheap price, dumped it on someone else, and then probably ruined a bunch of people's lives by helping them buy this meme coin at a completely worthless valuation. So I think it's like very not great for society. Whereas like Bitcoin is very different. Bitcoin is just money because you hold the money and you never need to sell the money. Like you can sell the money to consume or whatever you need to do in the future, but you're not trying to ever. There's no need to ever cash out of it if you want to, or like if you don't like. Yeah, there's no reason to ever actually cash out of Bitcoin because you can, if you want to continue preserving long-term wealth in the future, then you would just keep holding the Bitcoin. If you need to consume or invest in the future, then you'll sell some of your Bitcoin and invest or buy a house or buy food, whatever you need. And so that's kind of how I think of meme coins. Like it's just like a negative sum lottery ticket that is most likely going to turn to zero over the long run. When it comes to like other cryptos, like whether it's Ethereum or Ripple or whatnot, I still think over the long run, those are also going to trend towards zero. Because again, if it's not money and it doesn't provide a future cash flow, then what's the purpose of holding those tokens? In my opinion, there's no purpose. There's no way to value those tokens. They're not valuable. And it's also kind of like, it's like holding like a Chuck E. Cheese token, right? Like if you wanted to invest in Chuck E. Cheese when it first started out, you should buy the equity in Chuck E. Cheese, the company, or you should start a Chuck E. Cheese franchise where you own a Chuck E. Cheese. You shouldn't have ever bought the Chuck E. Cheese tokens to use the games at Chuck E. Cheese. Like those probably got devalued over time. You needed one token to play one game. Like maybe it like somewhat kept value, but like it was a horrible investment. Like you should have just invested into Chuck E. Cheese by buying the equity, buying the stock, or you should have opened up your own Chuck E. Cheese. And so it's like, and that's how I view a lot of these like crypto type things is, again, it's a kind of a casino where the price could go crazy for whatever reason because other people literally think it's a good investment when, in my opinion, they're wrong in the long run. And you may make a lot of money on it in the short term, but you also may just kind of like lose a lot of money. And it's not really, again, it's just kind of like a casino gambling type thing where it's like, okay, you may make a lot of money, but like you didn't really do anything for the world, and it's kind of a pointless endeavor. And then like you can even go back, over the last 13 years or whenever altcoins existed, I guess last 11 years or so, and you can track almost every altcoin denominated in Bitcoin, and they're all going down to the right pretty much towards zero. Like Ethereum is probably the most successful altcoin, and it hasn't made a new all-time high in Bitcoin terms since 2017. So that means since like June of 2017, which was, 7 years ago, Ethereum is going down. Like it's been trending down for 7 straight years, and it hasn't made a new all-time high. That's like looking back at June 2017 when the price of Bitcoin was probably either $1,000 or $3,000. That would be like Bitcoin has still not surpassed $1,000 or $3,000. Like that would be very terrible for Bitcoin. That's the nature of basically every altcoin over any sort of serious amount of time horizon. Like in dollar terms, they may actually be doing pretty well, but in Bitcoin terms, they're slowly trending to zero over time. So that's kind of how I think of meme coins and altcoins. And I think like a lot of the use cases that people describe for altcoins are just kind of like buzzwords and people like just trying to sell the token to get people to buy it so they can make real money and sell the money and do whatever they want with the money. So that's kind of my overview of how I think about that, at least.
That is interesting view. What do you say about the BlackRock's approach to the tokenization of the real world? Will they be using any kind of decentralized platform, including Solana or Ethereum or anything that is available right now, or will be seeing some centralized, some sort of like a hybrid of the centralization as well as the decentralized platform where they can kind of actually tokenize the treasury bill or any kind of real world assets? What's your view?
Yeah, it's another great question. And I think thinking about tokenization of real world assets is very funny, because if you own a building, right, and you have the deed and the title to that building, if the deed and the title to that building is tokenized, then what happens if you happen to lose your private key? Does that mean that you lost the deed or title to the building? And if so, then like, okay, like who owns does no one now own the building that exists in the real world? So that's kind of like a pretty much a major problem, because if all of a sudden someone like BlackRock or whoever can go back and say, actually no, like we're scratching that one out on the ledger, we're going to give you a new title or deed that you have a new private key to since you lost your first one, then this will be the new title and this will be the new deed. Well, then that's basically back to the original system that we have today, where you have one entity, which might be BlackRock or the US government or whoever, that effectively says you have this asset because we say you do. And that's because they have control over the actual ledger, and it's not quote unquote like decentralized. So that's like one point of why like I don't think real world assets really make much sense. Another point with real world assets is, say someone walks up to your car or your building and all of a sudden just like has an armed guard outside of it, and they take it, like they conquer your building. Like say you had a building in Ukraine, and your building was on the blockchain, and BlackRock told you that you had this title to that building in Ukraine, and then Russia comes in and takes the building. It's like, okay, you're then saying to Russia, like, I have the private key to the building over here and wherever, the United States, that's my building. Well, it's like Russia, like they're not going to care. Like they're going to be like, no, like we own the building now. Like I don't care what your fake blockchain says. Like it doesn't matter. And so again, then all of these real world physical assets, it doesn't come down to like what the blockchain says. Unlike Bitcoin, which again, like you can't go out there and take someone's Bitcoin. Like it's not a physical thing. The beauty of Bitcoin is it is not a physical thing. It doesn't physically exist. So you can't just take it from someone. It's whatever the ledger says who owns what Bitcoin. And so again, like going back to the Russia example or Ukraine, if Russia takes it, it comes down to like who actually can physically say that I have the asset. And then like typically like that's just going to be like whoever has the power or the legal authority to just say like, hey, this asset is really our asset, not your asset, because we have a tank sitting right next to it, right? And so again, I think the tokenization type thing, it falls apart because at the end of the day, physical assets rely on centralized power structures to determine who actually owns what asset or each asset. And I think that once you realize that, then you're like, okay, there's actually no need for a blockchain here. There's no need for it to be decentralized because at the end of the day, a centralized authority is going to be the one that says you own this asset or you own this asset. And kind of that's my perspective on that. And so I think like you can digitize like this stuff. Like you can say like you can, BlackRock or the United States could, set up a MySQL database and say that, Joe owns this building or Joe owns this car. But at the end of the day, there's no need to put that on Solana or Avalanche or whatever blockchain there is, because at the end of the day, BlackRock or the government it can just go back into the database and change who owns the building or who owns the car. That's my view.
That is interesting take. Yes, that is true that there are a lot of hurdles, and I hope we will see some kind of thing. But to take on the first thing, like if someone loses the private key, where do you go and find the thing? Um, it has happened in the real world too. So this is a case in Nepal where the government started distributing the land, right? And they had a record of who owns what kind of land, right? And one day the building got in fire, and all of the documents were kind of burned down. And we have seen some kind of events like that in a real world scenario too. And there is, like you said, like if we want to tokenize real world asset, it gotta be robust. It have to be better than what we have currently have. I mean, Bitcoin did the same thing, right? It did not just only solve the double spending problem. It actually brought and made the money better. That's why, like, a lot of people were kind of, okay, we have the dollar, okay, that's fine, but we have a better version of it too, and which is the Bitcoin, like you were saying. There is going to be a huge. I hope there is going to be a huge innovation towards the blockchain, and we'll see how things plays out. That is true. So Joe, moving on to onto the advice of it, right? For someone who is just starting their journey in crypto and in terms of investing, what advice would you offer them based on your experience?
Yeah, it's a great question. My view would be one, like take a big step back and think about big picture of what you're trying to do. Most people are probably trying to save for the long term. And people might think that the best way to do that is to pick a bunch of stocks or pick a bunch of crypto and hope that one of them or all of them go up in price a lot. I think that's maybe like not the best way to do that. I think the best way to save for the long term would be to dollar cost average into Bitcoin, put it in cold storage, maybe use a platform like Unchained where you eliminate any single point of failure when you're holding your Bitcoin. So that way, if you do happen to lose one of your keys, Unchained has a backup key that can help you redeem and get your Bitcoin back. And I think the best way to think about this is just every time you get paid with your job, have a portion of that paycheck go straight into cold storage Bitcoin, and just like you would set up like your 401k, mindlessly buy Bitcoin with an amount that you can afford to buy every month, and then over a period of years that will accumulate over time. The price of Bitcoin will probably go up, and you'll do very well. And then also like it doesn't make sense again to try to trade the price of Bitcoin. It doesn't make sense to try to buy all of these random speculative assets. It just makes sense to buy Bitcoin, put it in cold storage, and then focus on your family or focus on your job or focus on so many other more important things than trying to day trade and speculate over like which asset is going to go to $1 million first.
That is a good take. To extend on the unchained part of it, um, I have again convinced and I have onboarded my most of my relatives into the crypto space and Bitcoin, right? And one of the things I mostly hear about is, okay, if something happens to me, okay, I have a private key, I have a wallet, I have transferred all of my Bitcoin to the private key and stored in a cold storage, right? If something happens to me, um, and my offsprings does not know the private key, that is gone. And I think that is what the unchained is trying to solve. Correct me if I'm wrong. Can you explain so that these people who do not have a lot of technical knowledge around the crypto, around the private key, around securing the wallet, how should they start thinking about utilizing the platform like unchained?
Yeah, it's definitely a great question. This kind of actually ties into our new connections product, where what would happen is you would set up what's called a 2 of 3 multi-sig vault for your Bitcoin. 2 of 3 multi-sig, what does that mean? Basically means there's 3 keys that secure your Bitcoin. 2 of the keys of those 3 are required to move the Bitcoin. So you need 2 keys to move the Bitcoin. And then with the connections product within Unchained, you can hold one of the keys, your father can hold one of the keys, and then Unchained can hold one of the keys. So in that model, not Unchained never has complete access to your Bitcoin. Unchained themselves can never touch your Bitcoin, send it to another address, steal your Bitcoin, do whatever they want. Like, they can't do that. But in the scenario where your father, loses his private key, you have a private key as well, and then Unchained still has a private key, and that's the 2 keys that are required to move your Bitcoin. And then you're able to move that Bitcoin to another vault where maybe you set up another private key for your dad. And then the same scenario, it's like if that scenario occurred and you lost your key and then your dad still has his key, then your dad can work with Unchained, sign a transaction, and then move it to another vault where you have another private key. So this helps with inheritance, right? Like, there is no single point of failure when it comes to any of the individual keys in your vault. If one key is lost or the individual that possessed that key passes away, then there's always another person plus Unchained to actually go out there and save the Bitcoin out of that vault and then move it into a different vault where there are now 3 keys again, and all 3 keys are still found. So that's our new connections product that's basically, built for this purpose of not having a single point of failure when it comes to holding generational wealth.
That is really a good product that I think a lot of people can and should use too. If you are kind of skeptical about what will happen if something bad happens. I hope it doesn't, but if something
Yep.
bad happens to you, right, that is true. For the last question, Joe, I asked this to all of our guests in the podcast. What do you think it takes to be the ultimate bull?
It's a good question. I mean, I guess personally, I don't strive to be the ultimate bull. I strive to provide objective analysis and kind of what I think about the world of Bitcoin and what I think about Bitcoin in today's financial landscape. Um, so some people will kind of like post engagement on Twitter or X and try to like be the ultimate bull. They'll try to be a crazy bullish. And I'm crazy bullish on a very long time horizon, but I'm always skeptical on a very short time horizon. And I think that's the best way to think about Bitcoin and investing in general, honestly. Um, so so I don't strive to be the ultimate bull. I don't know if anyone really should strive to be the ultimate bull, but yeah, it's kind of how I think about it. Like, Bitcoin is long-term savings. You don't have to be the most bullish on Bitcoin to help people out. But I do think Bitcoin is going to go up a lot faster and a lot, more than most people can even imagine, especially if you're not already interested in Bitcoin. So yeah, I think Bitcoin will surprise a lot of people to the upside. But I don't know if that means like every one of us should strive to be the ultimate bull.
That is interesting. Interesting. thing I've ever heard over the podcast, and that is true too. I mean, you how we see the asset and how we see the investment, it defines us who we are, and it is really important to be comfortable around not what other people think, or what other people are saying, and be comfortable around yourself and what is your the risk and what's your goal in terms of financial freedom. That is really true. Thank you so much for your time. Thank you for watching this podcast till the end. I hope you got as much inspiration and motivation as I did today. The whole purpose of making this series of podcasts is to show that embracing the journey is as crucial as the final numbers. I believe you have already liked and subscribed to the channel. If not, please do so. Let's learn, grow, and lead this ultimate bull run. Until next time.